Welcome to the Real and Real Estate Podcast, your go-to show for real estate success. Whether you're an agent aiming to crush it or a buyer or seller wanting the inside scoop, we're here to deliver expert advice, insider tips, and the real talk you need. Each episode, we chat with top industry pros to give you the facts, strategies, and inspiration you need to thrive in this business. Let's dive in and make big moves together. Hi, welcome back to the Real and Real Estate, where we talk to the experts in the field of real estate to find out the facts and dispel the myths. And today I'm here with the wonderful Brian Severin of Trio Mortgage. He's got an amazing new product out, and I wanted you all to hear about it. So thank you, Brian. Welcome.
Yeah, thank you for inviting me. So this is brand new. And Gene, you're one of the first people I reached out to. It came out on Wednesday of last week. And
Wow.
what the bank program is, and we're doing the whole shebang, is what starts out as a Fannie Mae um, home ready loan, which normally would require a 3% down payment. And what we're doing for certain income bracket, and that in Houston is working out to about $6,800 per month. If that's your
Okay.
income level, that's something called the average median income, and it's a percentage of that number. And the way I've looked it up, and of course the systems that we use now figure it out for us too. So, but
Wonderful.
backing into the number, it actually comes from Fannie Mae, and there's an AMI lookup tool. And I looked all the way down to Galveston. I looked all the way up to the Woodlands, basically Houston and surrounding areas. It is 81,600 per year, which works out to 6,800 per month.
Okay. So
So
you
with
have to
that,
have no less than that, no more than that, or to qualify for this.
no more than that. So
That's what I
that's
figured,
the
but I want to check.
maximum. Yeah, the maximum to be allowed to get this. What turns out being a non-recourse, so there's no paying it back grant
Wonderful.
for 2%
Wow.
of the purchase price up to 7,000. So
That's
that would
amazing.
be, yeah, that would be anything in the 200 to $350,000 house, depending on the taxes and insurance. Um, you would qualify for this loan, and it's other than a free class that you have to take, and there's many different ones that you can take
Yeah.
for first time home buyers. If one of the borrowers, if there's only one borrower, if there's two borrowers, if both of them have never owned a house before, there's a free class you take about um, like counseling for a home buyer, first
Okay.
time home buyers. Yeah, and it's free. We've got it free on our bank website, and also there's government sites that you can go to get it. But it's totally. This is the amazing thing. It's available to anybody that with at that income or less. Um, it's 2% of the purchase price as a free grant. And now there's been other down payment assistance programs, and in 22 years of doing this, I never got involved in them because there was quite a few hoops. And
Right.
also, you know, um, this is actually where we're doing it all internal. So there is no going out to another government agency for the 2% down payment. So we can coordinate it and move really fast
Let
without
me
any
make, let
headache
me
for the borrower.
let me summarize, make sure I understand. If you make 81,000 or less, you would only need to bring 1% to the table. 2% would be a forgivable grant or just a grant that you don't have to pay back, but you have to be a first-time home buyer. Is that correct?
No, sorry.
Okay.
You only have to take the first time homebuyer course
Course.
if you are if you're a first time buyer.
Okay.
For existing people, you don't even have to take a course or anything.
So
And
if
this
I
is
want, if I made less than 81,000, I could apply for this grant to buy a home, even though I've owned homes in the past.
that's correct.
Perfect.
That's
That's
correct.
amazing. That's
And
amazing.
no, I mean, this is where it gets crazy, and that's why I got super excited. I mean, I'm so glad you invited me on this because I've been talking about it every day since it came out. So um, this I'm getting into some good stuff here. The credit scores, it can go down to as low as 620. Okay,
Wow.
yeah, so
Wow.
620. Yeah, so 620 is a pretty low score, but if you want to start the pre-qualification process, we're not a credit repair person, but if you apply with Trio Mortgage, um, we can any one of us can give you some guidance on how to
Perfect.
improve your score. And
Perfect.
it's one of those AI products that's built in now to something we're paying for a subscription, but it'll make recommendations. Plus, me personally doing it for so long, I can look at a credit reporting. I can sometimes do it faster than a computer, but recommendations on how to improve your score, and then we'll do that for you with no charge. We'll do
That's
that for you.
fantastic.
Yeah, if you're applying for a loan, we're not just doing this if
Right.
you're
Well, no,
yeah, for
that's a
yeah. So
given.
once you yeah, so really what we need is the borrower to submit an application online, which is super easy. And then the button that they click that says authorization to pull my credit report. And then the number one is like a certification and authorization, which allows us to do these things in the background and make recommendations. And it's like super fast.
Wow.
So get them pre-qualified early before they go out shopping and get excited about a home. We'll know exactly what they can
Yes.
qualify for. And with the internet and stuff, I can look up a property if you want it in particular, get the taxes and the insurance plugged in there, and really know what the monthly payment's going to be, and then
Perfect.
whatever cash they would bring, the 1% plus normal closing costs, because you're going to have to set up the rest of the loan, like with escrow accounts for your taxes and
And your
insurance.
insurance.
Uh-huh.
Yeah.
Okay. And I know, and it seems like I'm getting super duper excited, but I got to keep going. There is no loan level price adjustments for credit scores. Okay.
Oh,
What does that mean? What does that mean? Okay. A borrower with a 620 score gets the same rate and the same price as someone with a 700 score.
well, I mean,
That's
this just gets better and better.
I know. It's like, how is that possible? This is really like a community reinvestment. And I mean, a long line, like when we first met, I believe was 2004 or five, there was some programs like this that were offered by um, Fannie Mae and Freddie Mac. And we could do financing, particularly with,
Yeah.
with lower income. And it was affordable housing. And the big banks at the time were coming out, and I haven't seen a rep from Credit Suisse in forever. Bear Stearns, what are you doing? HSBC, and they were all pushing it because there's an incentive for the big banks because they've done a job for 100 years or whatever of loaning to people with high income, and
Right.
this is their reinvestment. Um, like volunteer work, it's kind of
Right.
not, yeah,
Reinvesting in the
philanthropy.
community. Yeah.
Yeah, reinvesting. But there's no requirement for the zip codes or anything. That's another one that got tricky about some government loans. So
Yes.
it's just straight up. But now, while we were, getting in touch, warmed up for today, I looked up and plugged in somebody with a high credit score, and it makes the difference is for the monthly payment with better scores, is that the mortgage insurance is gets much lower.
Oh,
So it's got
okay.
mortgage insurance to the tune of that's called an MI factor of 25. Um, but with high scores, it's a smaller mortgage insurance each month. So
Okay.
if there's anything we can do, I mean, like if there's anything we can do that would just jumps out that would push them, into the 620 range, or if they're at 700, maybe if we could get them to 720, if that helps. What I've
It
been
helps.
working on is different scenarios in that 620 to 700 range, and there's no difference in rate. But if they're short of the 620 credit score,
Then you got to work on it.
it's yeah, we got to do some work because
Yeah.
it's worth it. You can always go FHA, but FHA is going to require a 3.5% down payment, and we don't have a grant program for that government loan.
Right. And we're trying to
Yeah.
get people into houses. So I think it's amazing that it doesn't affect your interest rate because I
That's right. I believe me, I went up and down with the rep. I use there's a chat inside that uses an AI
uh-huh.
program inside of our software. Chatted with them, chatted with um, whatever its name is, the chat software, and then and I've got it in writing, three different ways, and I'm pricing out actual scenarios. I've got templates set up for different size house, different purchase prices
Yeah.
and income limits. So yeah, it's been a
Oh,
long time since I've had anything like this, and
that's
it's brand
exciting. Yeah.
new. I know it's brand new, so I don't know if other people have had it, but I've I've really only had two jobs in the last 22 years, and Trio Mortgage has got really great. I mean, I guess software makes it easy for me. Of course, the guys are all super, and I've worked with
Yeah.
them for 18 years, Mark and Justin and Matt over the last 10 years. But those are the principals of the company and me and which
Well, this is a
it's super fast, super fast. I couldn't believe how fast. The last loan I closed was 7 days from the time we submitted it.
no way. No way.
Yeah, 7 days. I know. It sounds like unrealistic, but that's somebody that turns in their application with their pay stubs and their bank account information for 30 days or 60 days.
They get all their
And
paperwork in.
yeah, get it all in
Yeah.
and get a sales contract. And this was one where it was the builder was saying, well, if you don't get it together by this date, we're going to charge you extra. And it's like, I don't think we're going to have a problem with that. We were done,
Yeah, there's
two
a
weeks,
deadline.
2 weeks, 2 weeks, 2 weeks early.
And now, time for a short break.
Hi, I'm Natalie Hartman, and I'm the owner and principal designer of Morph Home Staging and Design. At Morph, we specialize in vacant and occupied home staging, interior design, Airbnb and renovation design, as well as furniture rental for short and long term rentals, which includes residential properties, assisted living communities, and model homes. For further information on these services that we offer, visit our website at Morph, and that's MORPHE, Home Staging and Design, or you can call us at 281-826-6744. We look forward to transforming your space.
On the appraisal, okay, if you have um, um, a decent score and the desktop underwriter, which is our automated AI software, determines that they'll accept the county appraised value and maybe something like Black Knight or Redfin or Zillow or the county, that's more, and they look at the
Okay.
value that you're paying for the house, and they won't charge you for an appraisal. They'll just do a appraisal waiver. You know,
Oh my goodness. Well,
I know, I know, I know, I know. It doesn't work on new construction. If it's brand new construction, you can't get
yeah.
and never get an appraisal waiver, no matter what your score is. But
Interesting.
if it's an existing home, they'll take what the computers figure that's a fair price. And you usually do a comparative market analysis, right? I mean, you
Right.
do before you make an
Right.
offer, so you know that this is a fair price. And then anyway, that's another 500, $600 you might save if we get that. I mean, you really is the list just keeps going on. I think I've told you everything there is.
Well,
I
it's
think I
amazing.
have, but
I've just never heard of this kind of program. I mean, it is very consumer friendly. I mean, it's really trying to help people get into a home, which is, I'm sorry, but that's what we all need to do because
yeah,
it's a, you're building equity, you're making money, and you're saving taxes, and it's just all around a good thing.
yeah, and I mean everywhere I'm going today, um, the little shopping sprees for the hardware store, and I needed to get an inspection sticker and stuff. I mean, I'm talking to the guys at the inspection station about it. I mean, this is so much better, you know, than an FHA loan, which has that upfront mortgage insurance
Mhm.
and it never if you're putting 3.5% down, the mortgage insurance stays for the life of the loan. This is a conventional chassis, Fannie Mae or Freddie Mac we can use, 30-year 97 LTV loan with 2% grant for the down payment. So you only bring 1%. So I'm hoping we're going to stay busy with this thing. And I've got worksheets ready. Anybody wants to call or email
Okay.
us,
Can I clarify
share.
one thing? Since
Sure.
this is since it's a conventional loan, a lot of times people go, "Well, I don't want to pay PMI. That's just more money per month." But that PMI number will go away once you hit 20% equity. Is that still correct?
It does on a conventional loan. It does.
Conventional,
Sure.
yeah, which this is
Yeah.
correct. This is
Yeah. This
conventional.
is a conventional loan. Yeah. The alternative is if they don't have a 620 score and there's no hope for really bouncing it back up. The
Yeah,
FHA is really now the only alternative. But I would rather spend a little bit of extra time with the client and get their score up to 620 if it's doable. And
yes,
just think that extra for an FHA loan. There's that was 3.5% down payment. So instead of having that much down, you've got a little money if we can pay down a balance on a credit card or
yeah,
to pay other things that will improve their score. That's usually
yes,
what it
sure.
is. Or paying off some bad stuff, to clean it up. And
Or
then we do what's called
if you've got a good credit score and you're only putting down 1%, then maybe you can afford to buy a new washer dryer. Or maybe you can not until the deal closes, or paint your house. You have a little money to do
yeah.
something that'll make it your home.
Yeah, yeah, and I mean today I've been all around this. I've done a big loop around the city, but I was at a client that just closed on a loan, and we did a small down payment, but it was getting them
Mhm.
into a home, and they've already done the floors and paint, and I mean cleaned it up. I mean it looks. I mean he probably added
Amazing.
$20,000 to the value of this house in just a month of
Wow.
little things, like the
Right.
paint and the flooring and stuff, which maybe cost a few bucks, but boy, it looked a bunch better than the pictures in the appraisal when we
Well, and
just closed about a month. Yeah,
that makes the house your own. You're enjoying it more. You're increasing your value. So if you do have
yeah.
PMI, you might actually get to that 80%, 80% faster.
Yeah, yeah, and certainly with improvements. I mean, I think the main one what I was picking up was the paint and the flooring, which looked, it's a lighter color. It really brightened up the whole, the paint
Right.
and floors, and wow, it's like
Floors
bam.
are important. Yeah. Floors add a
Yeah,
lot of value.
and sometimes window treatments or something. I mean, just stuff that you're going to need, and of course appliances. Ugh, refrigerator, washer, dryer.
Well, and it may
Have
come with the house, it may not, but
yeah,
1%
yeah.
down allows you to get in a house and maybe have a few dollars left, hopefully.
Right, that's right. Yeah. Get some dog food or some plants for the front yard. I don't know.
All right, so everybody out there listening, if you make 81,000 or less and you want to own a house and your credit score is 620 or above, give Brian a call. If it's less than 620, give him a call and see if he can help you get it to 620 or
Yeah,
more.
and it's really painless. I mean, our application is one of the slicker ones, and I put it on my signature on my business card on all those emails. So um, you can do it 24 hours a day. I get alerted, and if it's not too late, or Sunday morning, probably not a good time, but anytime after that. I've actually worked on some loans like during the Super Bowl or I mean
Well, hey,
the World
business
Series.
keeps going. Yes, I
Yeah,
still show houses, so
yeah, yeah. I don't care. I mean,
no,
because you can DVR everything. I mean,
true.
you can avoid
So, Brian,
commercials if you want to.
how do people? What's the best way to reach you if they want to talk to you about this more?
Sure. Yeah. It's Brian at Trio, the little minus sign, mortgage.com. That's my email.
Okay, and it's Brian, Brian.
Uh-huh. Brian. Yep.
Okay, well, some people spell it differently, so I wanted to make sure.
Yeah. Yeah. I know. I know.
All right,
I,
well,
I had a friend.
what else do you want to tell
Well,
us about this? Anything else we forgot to mention?
no, I mean, I think as far as the affordable products, that's the new cat's meow.
It's
It's
amazing, quite
just
frankly. It almost sounds too good to be true. So take
yeah, and
advantage
I
of it
mean,
while you can.
and we're brokering loans, so just say that the wholesale lending marketplace has got great rates. So we're usually unless somebody's got running a special at the big brand X banks, I mean, we're coming in probably a quarter to 3/8 lower on regular loans, and
Wow.
that includes VAs. We're veteran owned companies, so we've got some
Fantastic.
specialists, some specialists right here in Houston. So
Well, that's
we're
important
happy
because
to.
not everyone knows how to do a VA loan, quite frankly. So
Yeah,
that's
well,
fabulous.
Mark, is a Marine, so
He has a special
and
place in his heart for that.
yeah, yeah, it sure does, and he's a good man too. I mean, they're all it's a good group of guys. I like
Good.
my company, and we're easy to work with. We're fast. Um,
Yeah, 7 days
fun.
is pretty fast.
Yeah, I think that was business days though. I don't know if that was calendar days. I saved
And
it,
that's
but
still remarkable. Still
it
remarkable.
is it is a lot of work, and my processor is awesome. I tell her that every day. That's who helps me with the loans, getting them done on time or ahead of time, and yeah, I'm looking forward to it. And rates are decent. I mean, I looked at different pricings depending on if you wanted to pay anything to get the rate down, or if you want to keep it at par.
Right.
We'll just look at it, and the worksheets, I can turn those around in an hour after they apply, which will give them some numbers to look at and say,
Yeah.
yeah, we can afford that. I mean, or no, we better
Well,
not.
the key is to call and talk to you about it or email and get together. And I hate to say
Sure.
that we're running out of time, but this is
Oh
just
no, that's
amazing.
good. Thank you. I mean, I got a lot in. I got a lot
Yes, you
in.
did. This is an amazing program. People, do not hesitate to contact him. Find out if it'll work for you. Get yourself in a house. Stop renting. Stop paying someone else's mortgage. Pay your own, right?
Right.
Okay. Thank you,
Sure.
Brian, so much. And
Okay.
that's Brian
Good to see you.
at mortgage.com.
That's correct. All right. See
Bye.
you
Thank
soon.
you.
Bye bye.
Thank you for tuning in to the Real and Real Estate Podcast. I hope today's insights have inspired and empowered you. Don't forget to subscribe, leave us a review, and share the podcast with anyone who might benefit. Have questions or a topic you'd like us to explore? We'd love to hear from you. Until next time, stay informed, stay inspired, and keep moving towards success.